Hey everybody, Rob Maurer here, and today we are going to be talking about Tesla's sales in Europe. Some of that data is starting to come in, and it is pretty interesting. We've also got more news on Elon and Twitter, another new note from Morgan Stanley, and then a couple of stories from other automakers, GM and Honda, Volkswagen, a couple other items as well. Looking at the markets, basically the inverse of what we had seen on Monday. Tesla down 4.7% today to close at $1,091.26. The Nasdaq down 2.3% on the day, versus the Dow just down 0.8%. So like I had said with the big jump yesterday, that felt a little bit more macro-driven than delivery report-driven, and I think today's action kind of supports that same idea. One of the macro factors today may have been comments made by Leo Brainerd, who is on the FOMC, Federal Open Market Committee. She made some comments that implied that the Fed may be interested in faster interest rate increases. She said, quote, "The committee is prepared to take stronger action if indicators of inflation and inflation expectations indicate that such action is warranted," end quote. All right, seems like kind of a non-statement to me, basically saying that if there are indicators that the action is warranted, we're prepared to take the action that is warranted. Very circular. So I don't know, maybe this is one of those cases where people see a drop and then are kind of looking around for a reason and then find something and attribute it to that. Could also just be a case of heightening the uncertainty around the release of the FOMC meeting minutes from March. That'll happen tomorrow, about 2 hours before market close. If we look at the macro calendar, that's kind of the big item for this week. But with the Brainerd comments and then the drop that we saw today, hopefully that reduces the risk going into that event if some of that is already a little bit priced in. Since we are looking at the macro calendar, next week is going to be a pretty big week. On Tuesday, we've got the core CPI release for March, the Consumer Price Index, and then on Wednesday, the PPI Producer Price Index. Both of those will happen an hour before market open. So all eyes on those reports to see how inflation is coming along. All right, getting into the Tesla news then, we're going to start with some sales data that is coming in for Q1 for Europe. We're going to be looking at Germany and the UK. These are the top two auto markets in Europe. I think you all know that I tend not to like to look at individual countries for individual months, but since we are talking about the full quarter here, this is a data set that is much more valuable to look at. So we'll start with Germany. Germany is by quite a large margin the number one automotive market in Europe. They sell about 2.5 million vehicles per year roughly. So here we're looking at January through March, or total Q1, 626,000 vehicles sold in Germany. And despite last year being a relatively weaker year to historical sales, this was down 4.6% year over year. As we look at these markets, that helps give context for Tesla's overall performance. As we have talked about, Tesla's sales worldwide were up 68% this year. And as we've talked about with the US sales, and then here in Germany as well, that's clearly happening in a down market. Now, of course, supply challenges are a big part of that, but still important context to have. So specifically looking at Germany, Q1, Tesla's sales were up 137% year over year. That growth rate was narrowly edged out by Polestar. They only delivered about 1,000 vehicles in Germany in Q1 though, so they were up 147% year over year. But aside from them, Tesla the fastest growing brand with sales of 14,400 vehicles for a market share of 2.3%. A couple of other interesting points from this data. Volkswagen brand sales, so excluding things like Porsche and Audi, those are separated out. Volkswagen brand sales were down 14% in Q1, so that was about 18,000 fewer vehicles this year than last year, and the total market sales were only down 30,000 vehicles from last year, so Volkswagen was actually more than half of the decline in the overall market from last year's numbers. Volkswagen is still the market share leader at about 18%, but having 18% of the market causing more than half of the market's drop, not really the position you want to be in there for VW. The other thing I find interesting about these numbers is that if you were to actually take away Tesla's excellent growth there, up 137%, the rest of the market would have actually been down 5.9% versus the down 4.6% that we're seeing here. Said another way, Tesla's results are actually making the overall market look quite a bit stronger than the reality for these other automakers. Along those same lines, as I mentioned, last year is not the strongest comparison, so we've got a listener that actually mapped out the Q1 performance here versus 2019 numbers. Those were pre-COVID, and overall sales in Germany down 27% 2022 versus 2019. Of course, Tesla has had huge growth over that period of time, and what's exciting here is that we're just getting started in Germany. With Giga Berlin now ramping up, these numbers are going to start to change very quickly over the next 12 to 18 months. I mean, outside of Volkswagen, the second market share leader in Germany is Mercedes. They have 9% market share. That was 57,000 vehicles this quarter. If the Giga Berlin ramp goes well, I wouldn't be really all that surprised to see Tesla starting to compete with those numbers in 18 months or so, and certainly within the next 2 to 3 years. A lot of that is going to come down to how Tesla decides to allocate that production, but it's extremely exciting that at least that path is possibly there so soon. All right, next let's hop over to the UK. They are the number 2 market, basically them and France, right in the same ballpark, roughly 1.5 million vehicles per year. Looking at Q1 here, we've got 417,000 vehicles registered. That is down 2% from last year. But before we even look at individual vehicles, I do want to note that battery electric vehicle sales, 15% market share in the UK, up 102% year over year. Diesel and petrol registrations down 51% and 15% respectively. They also separate out plug-in hybrids, and while those did grow, they were only up 12% year over year, so not anywhere close to the growth that battery electric vehicles are seeing, and only about half the market share. Last year, those market shares were within about 1% of each other, so it's exciting to see that. Looking at individual vehicles, I don't have the total brand sales breakdowns here, but we can see that year to date, the Model Y and the Model 3 are both falling in the top 10 vehicles sold, slotting in at 6 and 7. They're also number 1 and number 2 for March, but as we've talked about, that's the delivery wave. So it seems like every 3 months we get those articles about, hey, Tesla top selling vehicle in the UK or wherever else for that month. I don't really care about that, but the year-to-date numbers are very exciting here, 6 and 7, with about 7,700 vehicles sold each, actually within one, the Model Y barely edging out the Model 3. So if you're in the UK and you took delivery of a Model Y this quarter, congratulations, you made that difference. But between the two, that is about 15,500 vehicles, which if you remember, that is about 1,000 more vehicles than Germany, even though the UK is a little bit smaller of a market. That also puts the Model 3 and the Model Y combined at about 3.7% market share in the UK. And although because we only have the reporting of the top 10 vehicle sales, I don't have the exact numbers, we can do a similar comparison that we did for Germany. If we take out Tesla's growth year over year, total UK market, instead of being down 1.9%, was likely down about 4%, excluding Tesla. The other thing to consider is if we look at this top 10 list of vehicle sales for the quarter, even though by units Model Y and Model 3 are 6 and 7, we'd have to run a little bit of math, but it wouldn't surprise me at all if these two vehicles were the number 1 and number 2 best-selling vehicles by revenue in the quarter in the UK. So it's fun to see this evolve, and just like we said with Germany, as Giga Berlin gets ramped up, that should help open up more supply for the UK, even if that supply is from Shanghai. So we'll move on from sales, but just one other quick note there. In Israel, looks like the Model Y design studio has now been opened up. The Model 3 has been a pretty strong seller in Israel since opening up sales there, so hopefully the same for the Model Y. Looks like they are setting the delivery estimate as September for the long range and as August for the performance. All right, as I said yesterday, we should probably be expecting some more news from Elon and Twitter. We've got that today. We don't need to spend as much time on it, but Twitter today announcing in an 8K filing with the SEC that they will be naming Elon Musk to the company's board of directors, with the term expiring in 2024. Interestingly, as part of his placement on the board, Elon and Twitter have agreed that as long as Elon is on the board and for 90 days thereafter, Elon will not acquire more than 14.9% of the outstanding shares of Twitter. So there's part of that leverage that I was talking about yesterday in terms of the capital that Elon has available to him. Twitter clearly recognizing that and wanting to put some limits on the amount of influence that Elon can attain. This does that, but it also ends up with Elon having a seat on the board. So I'm glad we spent time yesterday walking through what passive investor really means, because as Elon sits now on the board, he is going to definitely have an influence on the directions that Twitter heads in. Twitter CEO, at least publicly, does seem to be quite welcoming. He tweeted out this morning that, quote, "I'm excited to share that we're appointing Elon Musk to our board. Through conversations with Elon in recent weeks, it became clear to us that he would bring great value to our board. He's both a passionate believer and intense critic of the service, which is exactly what we need on Twitter and in the boardroom to make us stronger in the long term. Welcome, Elon," end quote. Elon had also tweeted out a poll about whether people would like an edit button and purposely misspelled the voting options on that. And Twitter's CEO quote tweeted that, and I kind of had to chuckle at his callback here to Elon's previous tweet, but he said that the consequences of this poll will be important. Please vote carefully. Of course, they're referencing Elon's tweet about whether or not Twitter adheres to free speech. On the Twitter subject, Morgan Stanley did also put out a note on that today. They had issued a poll yesterday to institutional investors. They heard back from 38 of them. They were asking, in your opinion, what's the primary motivation for Elon Musk taking a 9.2% stake in Twitter? Option A, Elon's weighing in on free speech, seeking greater influence on Twitter to preserve his platform. B, answer A, but may also portend future Tesla strategy around platform/media/content. C, just a passive investment, don't read too much into it. D, something else, ... question mark. So always kind of interesting to hear institutional thoughts. 61% selected A, 24% selected B, just 5% C, that was passive investment, 10% saying something else. So most people just saying that Elon wanting to influence the platform in general, or influence the platform and leverage that for Tesla in some way in the future. Answer B there, though, kind of a cop-out because it included answer A and said may also lead to this in the future, so I guess why not just pick that one. They also note that they got some unsolicited comments from investors, and exactly what I mentioned yesterday, one of them said that this is no different to Bezos owning the Washington Post or Murdoch the Sun, just a digital reincarnation of a similar strategy. I think most of us probably think that it's different, but I think the public perception is very much going to be that way. All right, next up here, I just wanted to quickly touch on something that we talked about yesterday, and that was the semi that we'd seen parked at Giga Texas. I had mentioned that it had a two-tone paint color on there. Looks like that's not the case based on a closer examination. Behind the semi, there's also an exterior panel there that looks like it just needs to be placed on top, but That being said, I do think if Tesla did decide to go with this paint, it would be pretty good looking. Next, we've got a couple of updates from other automakers. First, General Motors and Honda. Today, they announced plans to expand their relationship to co-develop electric vehicles. They don't really share many details other than that they are going to be sharing technology, sharing developments, and that they expect a new EV series to go on sale in North America in 2027. So not really too surprising. I think we're going to continue to see these automakers just desperately trying to figure out some way to make this happen. I really doubt this is going to help, and I wouldn't actually be surprised if that was detrimental, as one side just kind of relies on the other, hoping that maybe they'll figure it out. I mean, neither of these companies is constrained by size. Growing that size, I don't think that's really the solution. As for the lack of details, Mary Barra did tweet out today that, quote, "Together we are working to enable global production of millions of EVs starting in 2027, beyond GM's current global capacity target of 2 million EVs by 2025, end quote. I mean, tough to get more vague than that. She's saying millions of vehicles up from their target of 2 million vehicles, which is already millions of vehicles. So absolutely no concrete information on those targets. All right, next we've got an update on Volkswagen. This is being reported by Automotor and Sport. They are saying that Volkswagen is going to be calling all ID3 and all ID4 vehicles into service for a major software update that's hopefully going to allow them to do more over-the-air updates in the future, but not in this case. So apparently this is 200,000 vehicles that Volkswagen will be calling into service, both to receive that software update and then to also receive replacement 12-volt batteries, which Automotor and Sport says is being done because the current batteries may not actually be able to handle the software update. They also shared this interesting comment on the software from a Volkswagen spokesperson who said that, quote, "We have found that there are currently still many vehicles with very different software versions on the road," end quote. So clearly software continuing to be a significant challenge for Volkswagen, even just getting software updates pushed out, let alone what those updates are and then managing the differences from version to version. Compare that to Tesla, which can basically just pinpoint over the air update whatever car they want, whenever they want, with pretty much whatever they want. All right, last item here, just a quick scheduling update. As we know, the Giga Texas event later this week on Thursday. I am very fortunate, very thankful to be able to attend that event. Very much looking forward to being able to cover that as best I can. That means the schedule is a little bit in flux, though. I'm not exactly sure what the timing of episodes is going to look like over the next few days, especially for Thursday and Friday. For tomorrow, Wednesday's episode, I am trying to do just a normal episode, even though I will be traveling. Might be a little bit briefer and probably out a little bit later than normal. On Thursday, I'm sure we'll do some live streaming, so if you're an audio listener, make sure to check that out on YouTube. Then I am traveling again on Friday, so kind of to be determined there as well. But we'll do our best, and we'll try to get as much content out as we can. In the meantime, as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for that Wednesday, April 6th episode of Tesla Daily. Thank you.